Welcome. This is Farouk from Actualize Digital Assets. In today's live stream, we're going to discuss about two parallels in the financial world that are operating today. One that's making the headlines with its drama and its instability, and the other one that's quietly building the foundation for the next generation of wealth. So let's get into it. Uh, so as usual, this is not a financial advice. This is provided for education and information purposes only. Um, so the topic of today's live stream is the great wealth reshuffle and whether you are on the right side of it. Um, so at first, try to see the gaps between these two parallels and we'll explain to you how you can bridge it. And also the idea is that we dissect several major macro events and institutional reaction to them. So first is the illusion of state stability. So we're seeing a fascinating divergence here. While many actors want to believe in the perfect markets, the political machinery underpinning them is showing unprecedented strains. So as you can see here, the probability of U.S. government shutdown in 2025 has reached its highest point. Um, this is the prediction from Polymarket, which is one of the most accurate prediction markets in the world. And maybe by the time you're seeing this video, it would be already much higher. So this is affecting many assets, affecting also stocks, but also crypto. So this is not just about politics. This is systemic fragility of the financial system. Um, and this instability is not something that's happening by chance. This is engineered. So for you as someone who's managing significant capital, such predictable instability in the world's reserve currency jurisdiction, which is the US, is flashing red light. And the US government is planning to change the world order to make America great again. So this instability is planned, is engineered, and will continue for the next few years. So this compels us to ask the question: where is true stability found, or where we can access more stability for our assets and our investments? So this is the central bank's, the Fed's plan. So at the same time, while this instability is happening, the guardians of the system are signaling a pivot, and the overwhelming probability of predictions right now are for Fed rate cuts. It's over 87% rate cuts, which means that this will fuel crypto assets and will help the appreciation of crypto assets and Bitcoin more specifically. So this is not sign of strength. It's a preemptive measure against a probable slowdown of the market. So this creates a classic dilemma for wealth preservation. So rate cuts may support asset prices in the short term, but they inherently devalue the cash itself. So the intelligent question then becomes not if to hedge against this, but how to do it efficiently and as efficiently as possible, actually. And so while mainstream narrative is distracted by the volatility and the instability, the most conservative capital in the world has been methodically building and using its own entry points into digital assets. So the institutional inflow numbers are staggering and showing how much institutional private companies and public companies also are investing in digital assets. So the assets under management for uh, public companies, for corporate crypto treasuries, hit 100 billion. So that's in the last 1 to 2 years. That's absolutely staggering as numbers. Um, and this is maybe the most important chart in finance that no one's talking about is the show me versus tell me. So here I'm showing you where the capital is going, where this capital is moving, and it's moving in one direction. It's moving into crypto, with general reports confirming the trend. And this is not just speculation; it's calculated strategic allocation. And this is not just institutional investors and institutional players, but also, as you can see here, because of the economic instability and economic and also of the inflation, high inflation rates, many countries are adopting crypto at an accelerating pace. For example, here the U.S. Uh, is might help. This is some of the piece of news that the U.S. will help stabilize Argentina's economy and pesos, and because the U.S. is Argentina is strategic partner to the U.S. But also this is fueling crypto adoption, and this will increase will help the appreciation of Bitcoin and crypto in general, crypto assets in general. And this is one country. There are many countries in the same case. So here, this is the inflation rate of Argentina, and as you can see, last year it was over 200%. 200%. These numbers are absolutely shocking for anybody who has any kind of savings or earning. He needs absolutely to move to everything to crypto. It's a matter of survival for him. So that's why crypto is poised for increase in value and adoption over the next few over the short and midterm. Um, and this is confirmed by the U.S. Treasury Scott Bessent, who said that the Argentina is systemically important for the U.S. And they will help stabilize the Argentina economy. So this acknowledges the fact that Argentina is in trouble, and the Argentina economy is in trouble, and this confirms the thesis that many people will go to crypto to prevent to survive, just basically for survival. Um, and also, one important point also is the maturation of the global market. So a final piece of the puzzle for institutional comfort is regulatory clarity. So we're now seeing the world's leading financial hubs move from ambiguity to integration. And the UAE is signing the OECD crypto asset reporting framework as a prime. And this is absolutely monumental. I think personally, this is one of the most important pieces of news, because it's the G20 finance framework that's being adopted by a sovereign wealth powerhouse. This is not about just crypto going mainstream. This is about a global financial system integrating digital assets. And the regulatory risk for those in the right jurisdiction is absolutely it's disappearing. So for institutional assets and institutional capital, this is a green signal for them to just go all in crypto. So that just one last note about institutional cadence. So uh, the institutional appetite is declining, and has declined in the last month, but this is signs of maturing strategy. In the early days of frantic accumulations are over, and now we're seeing a lot more long-term strategy by institutions. So even though it's hitting a 4 months low, this confirms certain stability over the long term, because institutional investors are planning long term, so they're not buying every single month significant amounts of their treasuries, converting their treasuries into crypto, but rather stabilizing at making strategic allocations of the long term, more longer term than before. And this is we think this is how sophistication looks like. It's not about buying every day or buying significant amounts of crypto suddenly, but it's more strategic accumulation. And the smart money now is breathing, is observing, and is positioning themselves, not just chasing as it used to be in the previous maybe first months of the new administrations after the US election. So they're moving from a venture bet to strategic treasury positioning. And that's really, really important to keep in mind. That's one of the most important things to keep in mind, is that institutional capital now seeing crypto as a strategic allocation. And also, one last point is about the Bitcoin importance and also stability and resilience. So this story happened a couple of months ago, And this is a reminder for everybody who thinks that crypto is affected just by uh, uh, maybe demand or offer and demand. Crypto is mostly affected by psychology of the traders and also of the institutional buyers. This is the story of a whale who bought Bitcoin in 2011, in 2014, sorry, and then sold it after 11 years, and he sold it for almost $10 billion, billion with a B. And this did not almost affect the Bitcoin price. It went down just to 3%. It was over the weekend, but it went down just 3% and recovered just after that. And that's absolutely stunning. This proved the sheer asymmetry of this asset class with its deep liquidity, stability, and also the exceptional returns that it can provide. So uh, this is not to suggest that these returns are typical. They are not typical. This illustrates a fundamental principle of asymmetric bets. It's the ability to invest in a small and manageable portion of a portfolio for an outcome that can meaningfully impact the entire performance of the entire portfolio, even the net worth of the person or the organization. So this question is for private bankers and wealth managers and family offices and high net worth individuals in general, is to how to capture a fraction of this potential without taking on unacceptable risk. And we think we have some of the solution. So this is our portfolio, our model portfolio that we've been running for a few years now. And as you can see, our model portfolio is outperforming Bitcoin, still outperforming Bitcoin. We have been outperforming Bitcoin in 93% of the time since 2020. And you can see also that the gap between Bitcoin and our portfolio is widening because our portfolio is heavily invested in altcoins that are undervalued, are heavily undervalued, and this is why we see the upward trend, and we have our performance is up to twice as good as Bitcoin over the last 4 years. So our fund is FINMA regulated. It's a Swiss crypto fund regulated by the Swiss Financial Market Authority. And if you would like to join us, you can just contact us through actualize.com/invest. Thank you very much.